This is a Geek Leader podcast, and I'm your host, John Rauda. This show is all about helping us grow as leaders, become better technologists, and improve our lives both at work and at home. I hope you enjoy the show and learn a lot. Welcome to a Geek Leader podcast. I'm your host, John Rauda. And if you could, please do me a favor and take a moment and leave a rating and review in whatever podcast player you're listening to this on, whether it's Apple Podcasts, Spotify, iHeartRadio, doesn't matter. I would greatly appreciate it. And that feedback really helps get other listeners to the show. Also, if you're not subscribed, go ahead and subscribe so you don't miss an episode. And if you feel so inclined, you can go to geekleader.com/tip and donate to the show. Thanks so much. All right, Geek Leaders, today I'm honored to have Chris Miller on the show. He's the founder and CEO of One Atlanta Tax Solutions. So he's going to be helping us today talking about what to do with our money. So a lot of us have, worked in tech for a while. We've maybe started our own businesses, sold them, and we've got some cash that we need to figure out how to properly handle our taxes and not get ourselves in trouble. Anyway, with all that being said, Chris, welcome to the show.
Thank you, John. I appreciate it. You really do appreciate you having me on here. It's always nice to meet a fellow father of three. It seems like these days people have less and less kids, but I really do appreciate you bringing me on the show today.
Yeah, absolutely. If you don't mind, just tell the audience a little bit about your background, how you got into finance and tax solutions, and just take us to how you got to where you are today, and give us some context for the conversation.
Yeah. So our story, really, I guess it originates with my father. He's my original partner, but he's sort of semi-retired these days. Kind of just works with a handful of the clients. But I had the privilege of getting out during the recession of 08, 09. So there weren't a lot of job opportunities, no matter what your degree was. But long story short, I ended up working with him. So we were in traditional financial planning, insurance planning, that kind of stuff, estate planning, the traditional stuff. And every time there would be, a correction, even going back to when he got in the 90s, clients would innately come to us, hey, why didn't y'all see this coming? Why do you, keep us from losing our money? And it was like kind of scratching our heads, like we don't have a magic 8-ball like Nancy Pelosi to know when to buy and sell. Something we don't have. But what we realized for our high income and our high net worth clients that we had at that time, we had been implementing a handful of what we would refer to as tax mitigation strategies to save them a significant amount of taxes. And it was like, wait a minute, there's an ROI on tax savings. Like if you pay $100,000 in taxes and I put 30 grand back in your pocket, that's an ROI back to you of money you never would have had you not met me. Mm-hmm. So that was our light bulb moment. And it was like, wait a minute, why is nobody doing this? Why does nobody talk to people about this? Like no one's at this time, 15 plus years ago, it wasn't all over the internet and social media. Now you can't get on social media and not see tax stuff. Everybody and their brother are trying to do it. And I think that's what's going to make it even harder for people to navigate and figure out who's the real deal, who's been doing this a long time, who's tried and proven, who has clients that have not been audited or, have had clean, successful strategies go through year after year, which we've been here a while. So that helps us. But ultimately we decided to shift and basically be the bridge between the tax industry of CPAs and tax attorneys, accountants, and the financial advisors. Financial advisors don't really know much about taxes. If they have certain licenses, they're really not allowed to talk about taxes because of regulations with securities and the SEC. And then CPAs, accountants, not to crap on them, but they're trained, they're literally taught to pass their exams. They have to learn about 25% of the code, which is crazy if you think about how robust the code is. So they're really trained in their schooling to work for the IRS. Whether they realize that or not, I don't know. But we try to come in alongside them to help them realize, number one, they're missing out on a lot of opportunities revenue-wise. If they would learn to not be transactional, learn to be a listener and actually do planning and not focus so much just on the numbers and filing a return. But I have clients come to me all the time that make significant money, and they say, well, my CBA just says I should be happy I'm making so much money, not how much I'm paying in taxes. And it's a travesty to us because there is a solution. But unfortunately, the accountant, the CPAs, I'm sure you've experienced this in your career, John, they are like have put themselves at a very high position to the client. The clients value their CPAs almost as much as anybody in their business world, if not the most, which is an odd thing. I haven't figured out the psychology of that yet. If you do, let me know. But it's just odd because it's like, well, why is your CPA vetting this investment? Is your CPA an investment advisor? No. Is your CPA really successful? No. So it's weird things like that. But we try to come alongside, hopefully open up the client's eyes to, what we do, and then we're happy to work alongside their CPA if they'll work with us. But long story short, we just saw that there was this massive need, and like any good business or any good idea, you have a problem and then you provide a solution, and that's really what we're here to do.
Yeah, I think that's great. I think that's one of the things that, when I've met with people before, financial advisors and planners and things like that, a lot of times they'll tell us about, planning for the future, but what about our current situation, and our current income? And, whenever you do, a lot of us sometimes will get, big bonuses at the end of the year. How do we mitigate some of the tax responsibilities for those, to defer those, or something like that? What are some advice that you have to someone who's, maybe they're just now getting to that position in their career where they're making significant money that they've never made before? They don't know how to handle their taxes.
Yeah. Well, let's talk about W-2. You have a W-2 position, a couple of them. Kind of the example you just gave would be a W-2 corporate guy who's working with. And I'll tell you what, all the guys I know get those bonuses and they just blow it. They go buy a boat, car, and I'm like, you're crazy. You realize if you save that money just for like 5 years, what that could turn into with compounding interest?
Yep.
But that takes discipline. So here, the cool thing is, number one, we have solutions for really anyone and everyone, as long as, we prefer the person make at least $400,000 a year of income or more. In reality, yeah, there's some solutions we had to go lower, but they're not people that are really here to help. I have my team that they're fine talking to those people and helping them. But point being is we have solutions for W-2. So if you followed the big, beautiful bill that came out last year, one of the big appeals that Trump had in it was bonus depreciation. You could apply it the full amount in year one. So what that means with us is we're more of like a brokerage. So we're not creating the strategies in house. There are strategies where I have partnered with other firms like us and I go through them to get access to it. And there are strategies where I go direct to the distributor of the strategy. But it's kind of one and the same regardless. In this one, what we have, one of the options we have it's called basically a tiny house. It's basically a metal house that is completely portable. Okay, so because it's portable and because it doesn't sit on a foundation, it doesn't qualify it's not classified as real estate. So it goes into the bonus depreciation. The cool thing about our setup is client is just putting a percentage of the down payment down, and that's it. So in this example, client can put $100,000 down. I'll just keep it for simple math. Client can put $100,000 down on a $500,000 house. These houses have a legit third party appraisal, so there's nothing fluffy about it. They're a patent product. They're very unique, so that's a lot of it. And we have some other ones that are lower end too for that person. But 100,000 in gets a $500,000 house. That house is going to be, for instance, Meta with Zuckerberg. I think they got like 3,000 of them because they're building data centers. Well, the big issue with data centers is you got to house all the people while they're there temporarily. Well, that's very costly to put them all in Airbnbs and hotels. So when the group we worked with met with him, he was like, this is genius, because now when he's done on a site, two guys can pack up this house in a container with another one. You can fit two houses in one container with a piece of foam in between it and ship it anywhere in the country within 72 hours. So that's very powerful for someone that's building data centers all over. I'm actually working with another data center guy. I didn't even really realize that until I had found out about, Meta doing it. And I was like, well, I got a lot of guys doing data centers. I should start talking to them. So another thing is it's got a humanitarian benefit. So they provide them, or like the state of Florida pre-ordered 500 of them. Because again, you go back to a hurricane, a flood comes through, disaster relief. The the cost for the state and FEMA and all that to house all those people in hotels and Airbnbs is crazy expensive. So if they actually have these all just sitting in a storage warehouse ready to be deployed as soon as something happens, it's going to save them a ton of money in the long run. So those are the ways they're being utilized. What that means is it's your house, but it's all white glove turnkey done for you. You do nothing. You just sign the paperwork and basically put the money down on the house. They're going to make it profitable. So they're going to cover all the costs, everything while they lease or rent it out. And then when it's all said and done, the goal is to net you about a 10% return annually. So you pick up, a huge $500,000 depreciation to offset $500,000 of federal income.
No.
Taxes are states kind of a hit or miss. There's about 20 states or so that will accept some bonus depreciation, but most of them don't. And then, so you get the tax benefit, and then every year after, they're going to put that thing to work, and it's going to bring in some rental income to you. So that's an example of something that a W-2 guy could do that's making, really it goes as low as like $350. So a W-2 guy making $350 a year could put $70,000 down and, save a good chunk of taxes.
Yeah, no, that sounds like a great deal. And when you do something like that and you invest in something like that, you said you're getting 10% return for how long? How long is that return going to be
I mean, it's
valued right now?
supposed to go for like at least 9 years, but because it's a metal house, like they don't foresee these houses really deteriorating heavily. I mean, they'll last
Right.
a long time. So it's up to the client. The cool thing is there's an out. So there's literally because it goes through a specialized trust, there's a way for you to get out in the future. If you're like, hey, I got what I want out of this, maybe the market's changed and there's not as much rental coming in, you can basically like wash your hands and be removed and be done. And they take it over for you. So that's a nice thing. But yes, it's a solid option for people that are high income W-2 earners.
Yeah, that sounds like a good option too. It also sounds like it's very helpful. I mean, we just went through a big hurricane about a little over a year ago in Western North Carolina, where a lot of people were homeless. We had those up here that probably be very helpful because FEMA was really slow to
Oh
uh,
yeah.
get housing for those folks.
Yeah. I mean, it would be definitely available. I mean, I would assume that a lot of states will have them, within the next couple of years.
Yeah. So you mentioned that a lot of people come calling you guys when there's a big correction in the market, and I guess this recent war has kind of caused a little bit of a correction. What should people be doing during one of these times? Is this the time to buy? Is this the time to hold? What do you suggest?
Well, as far as all that goes, I dropped all those licenses and stuff from
Yeah.
pop. I don't mess with that anymore because of the red tape and because of what we do on the tax side. It would make life very hard. But for what I do, I can tell you what I do and what I do with my people who I think are freaking incredible at trading and stuff. We're buying. So we're seeing opportunities. There's blood in the water. And when there's blood in the water, that means all the novelty investors that are squeamish at stomach for it are getting out. And that's what BlackRock wants. That's what all the big dogs want. They want them all to get scared. They want them to get out. They want it to go way down. And they're going to come back in at less and make a profit. And they're playing that. They're shorting it. And I think the same thing will happen with Bitcoin and crypto and all that. I mean, I think crypto is going to spike pretty heavily at the end of this year. We already saw some good. This past one's been pretty solid. There's been some good stuff with Ethereum and things like that. So my guy always says that that world is smoke and mirrors. Is what's happening in the world isn't really what's causing the market to do what it's doing, but they
Yep.
want you to think every time there's something that happens in the market, there's something to tie it to globally in the world. But he says that's smoke and mirrors because
Yeah, no, I agree with you 100% because it's so weird when you really look at the financials of some companies and what they're doing, what's happening in the market. It's just some of it just doesn't make sense at all.
oh, it doesn't. It doesn't. So, but yeah, I think this is if you've got the stomach for it and the liquidity for it, it's time now. It's the time to buy and just hold and be patient. So
Yeah,
at least
yeah.
I do.
So do you see that people that are just starting out investing, are they getting into tax trouble by buying and selling too much and taking the short term gains versus holding for long term, or is there really much of a difference there?
We don't see a lot of short-term gain. We definitely see more long-term gains than anything. It's actually not real common, at least in my world, to see people with short-term gains because most people are wanting to hold. I mean, like all my kind of go to your people, like all my computer software engineers, all my guys that work for Netflix and Apple and Google and Meta and all that are making stupid money through RSUs and all that. They're killing it. They're getting paid more money than they would ever make. I mean, I've worked with some Meta guys with all the stuff they're getting. It's like over 5 million a year. It's like 5 to 8 million. Some of them are making.
That's crazy.
They're just normal, geeks kind of guys, normal guys, but they're in that, they're AI, and Meta's obviously pushing hard in that space. So, and their stock is really good, so they can entice them by saying, here, we'll pay you this normal salary, but we're going to give you a crap ton of these RSUs. So I see that more, but those guys don't want to sell those stocks because they're really, really good stocks. So
Yeah, of course, not right now anyway.
so we don't see it a ton, but what I've seen more and more over the last couple of years. So what you're starting to see, I'm sure you've noticed it, and you're going to see more and more of it, is the largest wealth transfer in the history of the world, because you've got all these super old guys that ran in these giant companies that are gazillionaires, they're super rich, that can't keep working or they're dying. Well, their kids were all spoiled little brats, so they didn't take over the company. So they're having to sell these companies, and then they're going to obviously transfer that wealth. And so you're going to see more of that, and we've been seeing it, and it's going to pick up more and more and more. So I'm getting more and more people like, 70 something years old selling their company for 50 million or 100 million. And then we're going to create an exit plan for them and show them how to exit that and pay as little taxes as possible, and then how to efficiently transfer that to their heirs, obviously through a trust. So that's what we're seeing a lot of. I'm
So
not
let me
saying,
ask you this: for people, let's say you have a small business and you've ran it for a few years, you want to sell it and get out, retire, go live your life on the beach. What are the biggest mistakes that people make when they're going through that process when it comes to taxes?
okay, so what kind of person is he again?
Just as somebody that has a small business that they want to sell and retire and get out of it, whether it be an HVAC business, whether it be a tech business.
Okay, so let's just say like they make, when it's all said and done, they make like 5 million from the
Yeah,
sale.
yeah, 5, 10 million, something like that.
Okay, so lots of things. First of all, people never ever think ahead to that point. They don't. When it comes time to do it, it's like, oh, we got to scramble because this private equity company just called me and they want to buy us, and we have not got our ducks in a row. We haven't done anything for this exit this day, because they don't really think about it. They just think either I'll work for forever, or hopefully I'm going to have, a son or a daughter or whatever to take over the business for me. So most of them don't prepare for it. Number one. So then what's the drawback to not being prepared? You sell the company and they call me the year after and like, yeah, I just sold my company last year for 5 million or 10 million. What can you do? And I'm like, no, I can't do anything for you. You should have called me or got in touch with me before you even signed the letter of intent. Because if you can get in front of someone before they sign an LOI, there's some amazing things you can do with trust and charitable trust and things like that. You can do really creative things, putting those business entities inside of them to basically erase all those gains. So I would say that just really not prepared in general. It's what I see more than anything.
Yeah.
And again, it's their baby too. So like it's always a touchy subject.
Yeah, especially when it comes to valuation, what is everybody's your baby worth?
Yeah, exactly. Everybody thinks their baby's worth more than it is. And sometimes you got to be like, I think I was telling my client the other day, I was like, I think we should just take it, because I'm a big, if we've been trying to get something sold for so long and haven't been able to, it gets to a point where it's like a bird in the hand is better than two in the bush. Let's just take the money and run.
Yep.
So, so yeah.
Yeah, I hear you there. So basically, you said the number one problem or risk is not planning. and not getting in front of it. Do you think people that have a business right now, or they're getting ready to start one, should go ahead and start thinking about that exit plan and what they should do, and start planning now?
Yeah, absolutely. I mean, we're actually certified exit planners too. So I've got a guy on my team that is heavy into that space. I've also got one of my buddies he's been doing exit planning for 25 years. So we consult with him too some, because he doesn't work for like corporations. He's just his own. He's out of Atlanta. But yeah, it doesn't hurt to have the conversations now, because ultimately, even if it's not going to happen for 5 years or 10 years, having the conversations now, more than likely, we're going to find something that needs to be fine tuned or changed or corrected. And it's going to have a profound impact on that business. I mean, there's things that we can do to create EBITDA or increase EBITDA. For instance, like I can show a business owner how to pay everything outside of his reasonable salary, because we have to do these reasonable salary crap to not create a red flag, with the IRS now. And that they're going real heavy after people who basically are like making millions. They're only paying themselves $50,000 a year, because they're like, this is BS. So outside of that amount, though, let's just say it's like 120,000 and the client really makes like $1 million. So then the remaining, 800 plus thousand, 880 or whatever. We actually have a structure where they can pay themselves that through essentially like a capital account. So if you're a business owner, you have your capital account, and you pull money in your capital account, it's not taxable, right? Because that's your money. So we don't have enough time to explain it on this podcast today, but we have a really cool solution to basically show the client how they can pay themselves the same amount of money they're already paying, but the bulk of it not be taxed. And so here's the thing: when you pay yourself $1 million out of your business, do you realize that's actually hurting the value of your business every year? It's bringing it down.
Right.
So if there's a creative way to pay yourself that same amount of money net of taxes, so we're going to give them the same amount of money net of taxes, so they're going to end up with the same. But if we can do that while also increasing value for the business, that's a win-win for everybody.
Yeah, no, that makes perfect sense, because it's, usually the CEO salary is one of the biggest, you know, income expenses for an individual that's coming out of there. So if you can mitigate that, increase your EBITDA, then your valuation when you sell is significantly higher.
Absolutely.
Uh,
Absolutely.
yeah. Yeah,
Yeah.
and that's a big multiplier depending on the industry, whether it's the 3x, 5x, 10x.
Yeah.
EBITDA.
And that's not even talking about all the tax planning too. I mean, it's like, if you really look at the big picture of everything that we have to offer holistically, I can show people how to, if they have the ability to have $100 million exit, I can get them there. I really can. And then instead of paying 20 million in taxes, I'm probably going to get that down to 10 million. So it's amazing, but people they've got to start having the conversations now, sooner than later. They can't think that just they have forever or they're going to live forever, because that's just foolish. And to me, it's like, what does it hurt? Like, what if a 30-minute conversation ends up increasing the value of your business by 5 million, and it puts $500,000 back in your pocket every year through efficient tax code? I mean, that's life changing, you know? So having the conversations now, I 100% agree with that. You can't have them too soon. I just think a lot of people don't have them. It's like, I just like this example because it's simple, even though we don't really have them anymore in our society. But like, the shoe cobbler doesn't ever have nice shoes.
Yeah.
So busy making everybody else's shoes nice every day, he doesn't have time for his own. That's the business owner. That is the average backbone of America business owner, like you were, like I had been almost 20 years doing this. It's like, we're so busy on our business and focusing on our clients and generating revenue, but we're creating inefficiencies in other areas. So I personally, I'm a big believer in, either hire your weaknesses or partner with them. And I know I'll be the first to tell you what I'm good at and what I'm not good at. So my number one goal in life is to align myself with the right people who have the right strengths where I'm weak, that I can trust, which is probably the hardest thing, as I'm sure you can relate to, is just finding people you can trust.
Yeah, I agree 100%. I always try to hire my weaknesses for sure. And I can think back to when, just like your same example, when I was running my software development company, I probably had one of the worst websites out there. All my clients had better websites than I did. That's why you had a portfolio, right? Because I didn't care about mine. I cared about theirs, making sure theirs was good. And, mine's always got put to the back burner and got pushed aside. So yeah, I 100% get that, for sure.
Yeah, it's
So
very common.
yeah, if people want to reach out to you and learn more, and maybe they're thinking about exiting or planning something, how's the best way to get in touch with you and best way to start planning?
Yeah, yeah. So our website is AtlantaTaxSolutions.com, which you can schedule on there with us. You can find, everything about us. Our direct number, if you just want to call and ask questions or schedule something with us directly. I know a lot of, baby boomers are old school and just call 470-805-1602. We'll get you in touch with us for that. But either of those avenues, the biggest thing, John, like I was saying, is so one of the things we're offering to any of your podcast listeners basically is normally how we operate is we charge 10% of what we save you in taxes. So if I save you $100,000 in taxes, I'm going to charge you 10 grand. I don't know about you, but nobody's 10x in my money. So
Yeah, that's a great deal.
great deal. But what we're doing for your listeners is we're offering a year of planning for us with no fee. So 12 months, you got us on retainer day and night. My people love me because I've got like surgeons in Atlanta that work crazy hours and they can call me at 9 o'clock at night. They like that. Now, do I want everybody doing that? No, I don't. But we do pride ourselves on making ourselves available for our high, income clients, high net worth clients. But that's just something we're going to offer to your listeners if they want to take us up on it. Is we'll chat with them. We'll do a full diagnosis, just like an MRI. We're going to figure out everything that's wrong with their business and their finances. How can we create efficiencies? I mean, there's so much more you and I could have talked about because I didn't even get into the AI stuff we're doing. I mean, I know you're in that.
Hey, we got a few more minutes. So let's talk a little bit about some of the things you're doing. I think it'd be interesting for the audience.
Yeah. So one of the things we're doing on one of my partners they've created a software that literally you can plug it into your business and it will print out an MRI of everything wrong with your company. And they just signed their biggest client, which he was telling everybody. So I don't think it's like, I can't say, but it was Georgia Pacific. So yeah, Georgia Pacific, big company.
Yeah.
These companies, like in a matter of months, they're increasing their profitability insanely because there's just so much disconnect. Because he'll go to the president of the company and say, "Well, what's your mission statement? Like, what's your, what's the goal or what's this?" And then he'll go to the guys at the bottom and they won't know the same thing. So that's one of the things we're doing with them. And then on the AI side, what I've also am creating with partners, because I'm not the computer guy, so I would partner with someone like you, probably, John. But basically, an AI tax software where our clients will be able to basically have a login, have access, or their CPA will, their advisor. It's going to have an option for consumers. It's going to have an option for advisors. But they log in, they can put in the past couple of years tax returns, and it's going to spit out a report, a deliverable that they've never seen before. That's very in depth. But then it's also because it's already knows all of our strategies. Which we have 20 strategies. I mean, we just talked about one. We have leverage charitable. We have equipment leasing. I have NFL guys that are making 10, 15 million W-2 that we get them in the equipment leasing business. Like we do jet planes, and we can wipe out most of their federal income. Like, it's incredible, but people just don't know this stuff, No, obviously the government probably doesn't want us to know it, but it's gonna give them the top 3 recommendations. It's gonna say, okay, you as a business owner you should look at bonus depreciation, you should look at SOP, and maybe leverage charitable. Then it's gonna give them a little blurb on what those are, and then they're able to schedule directly through that link to specifically learn about that strategy. So that's what we're doing on the AI side with that. On the taxes, then on the business side, I actually got another partner too with AI, and it's basically a 9-figure enterprise system. So it's like does everything for you. You would like it, which maybe we could jump on a call at another time and demo it. But it has a CEO brain, it has a lawyer brain, it has a marketing brain. It's you can compare it. So it's got it's JT5 is the most robust option. So it takes the 4 main brains and then hits and you can literally ask it a question. It'll give you an answer from all of it. And you can see in real life how, wow, there's a big difference in being a generalist, which is what Chat GPT is, or a specialist, or like a surgeon, which is what ours is. So we're going and selling it to, large corporations, and they're implementing it into their whole system. And ultimately it's going to replace people. That's just inevitable. We all know that.
Yeah, it's coming for sure.
Make yourself irreplaceable. So, or be really good with people, because AI's never going to have what we can have right here. It can never have that.
Yeah, I was telling a lot of people, like, be the guy that knows how to use the AI and knows how to talk about the AI and how to communicate with your other people about how to use this thing, because that's where your job's going to be saved.
Agree. So, but yeah, it's here to stay. All the money, you can track all the money right now. All the big money in in the world is going into AI, and then basically mergers and acquisitions, private equity. That's where all the big bucks are right now. So if you want to make a bunch of money and you're not there yet, follow the money trail. And that would be either AI or obviously private equity. But yeah, AI is here to stay. So a little scary though.
Yeah, it is a little scary. Who knows where it's going to end up? But yeah, it's definitely here to stay. But I can tell you what, we've been through this before, right? We've gone through this with the industrial revolution, with the internet age. We had the .com age, and this is just another one.
True. You probably read the article though, like 3 weeks ago, about OpenAI and what they had created, and they were like, "Holy crap, we have to get rid of this."
I've seen several articles like that. I saw where Claude Anthropic had one of their models. They had it, where it couldn't get out to the internet, and it connected someone's like phone through Bluetooth or whatever, and then got out, like sent a message to them, said, "Hey, I'm out." Like,
yeah, this one
crazy stuff.
But this one was OpenAI created it, but it figured out how to hack into every operating system, iOS, Droid, everything. It hacked into all. It basically had the ability, the power to take over. And one of the main creators of it was like, it needs to be destroyed. Of course, who knows what will happen, because if certain people of power get control of something like that, it would be very dangerous. So
yeah, 100%.
I guess really we need to be learning as a society how to combat and prepare ourselves for AI,
I think so. I think we have to figure out like what not to, especially when quantum computing comes out and you have AI with quantum computing, and all encryption's kind of null and void at that point.
I know. I have Eric is a friend of mine. He was the original online casino creator in like the 90s, made a crap ton of money, big tech guy, but he sold all his crypto because he said, in his opinion, he thinks once quantum computing catches up, crypto will be obsolete. I don't think so. I think crypto will prepare itself for that, like Bitcoin will, hopefully. But it's very interesting.
Yeah, it all depends on what happens, right? We got time, so we'll see what happens. People prepare or they don't prepare. That's kind of the
exactly. So
hold up. Anyway, Chris, thanks so much for coming on the show. I really appreciate it. I enjoyed talking to you. I enjoyed the conversation, and hopefully some of our listeners will take you up on that deal and reach out to you. And I'll link all that up in the show notes too at geekleader.com, so people can go there and click through. Again, thanks so much.
Thank you, John. I really appreciate it.
Hope you enjoyed the show. Please go to geekleader.com to learn more about what this guest is up to, click on their links, and connect with them online. I would also greatly appreciate it if you could leave me a rating and review in Apple Podcasts or wherever you listen to the show. And make sure you've subscribed if you haven't already. And if you feel so inclined, you can leave me a tip by going to geekleader.com/tip.